Hey, good morning. This is May Valensky with a driving market. So there was no podcast yesterday. Quite simply, my daughter got married and therefore I was really having a couple of days off. So if you've missed driving markets, apologies. And even today it's going to be a very shortened version. So we'll just have a quick catch up. So markets dumped on Monday. They dropped off significantly on the back again. We're back to the same old target, which is recession fears, inflation fears, and of course interest rate rises. And in the Fed was saying, or the markets were suspecting that, as I said last month, that interest rates were going to finish round about rising now because everything was hunky-dory. Retail sales came off, this came off, that came off. There wasn't enough impetus there. It's actually a load of trash, and now the markets are fearful that interest rates are going to rise again. I've been saying all along, interest rates are going to go up. In September, the US interest rate is going to rise by 75 basis points. That came back into the market, that fear, and guess what? The market sold off. So anyone who thinks that interest rates are going to come down, are going to stop rising, it's not going to happen in the near future. I might be a bearer of bad news. You might think, why am I so negative? Why so this? Why so that? But I'm not going to talk dreamland and fancy wonderland saying, yes, it's all over, no problem at all. Interest rates have stopped rising, everything's hunky-dory. Interest rates are going to continue rising because the central banks simply don't know what to do about inflation. Inflation is a supply-driven, macroeconomic-driven, and also demand-driven factor at the moment, and commodity prices are beginning to rise again. So let's look a bit more detail. Yesterday, oil jumped up 300 points, 400 points, which was significant, going back towards the $100 a level barrel, and it's going to break through that. Remember, I've been saying the uptrend on oil has been up, and I've been talking about buying oil, even though it's had those individual days where it's come down and everyone thinks, oh, it's going to crash or it's stopped rising anymore because of recession fears in China. Even with recession fears and even with any other economic fears, the uptrend on oil is one way, and that is up. So if you have an opportunity to buy into oil, my opinion is buy into it, and therefore you should be long of oil. Also look at gold. Gold went up. I was talking to a few viewers yesterday, and they asked me what was my opinion on gold, and I said, well, I like gold. Anything anywhere between 1700 and 1720 looks like a buy, and yesterday it jumped up to 1747, so that was quite a good call yesterday. Again, gold is probably going to go back up to 1800s and look to bridge that in the near future, so take that into account when you're trading gold. Bitcoin also was up yesterday, 450 points. I would suggest any rise in Bitcoin at the moment is an opportunity to sell because it is more of a bear rally. Where we were in a bear rally up until, or on a bear rally from June, and again the investors believe that the bear market was over, and I've been saying for a while that it's not over. We're in the middle of a bear market. You can expect asset prices to drop further, so just be aware of that. We're going to be coming into the Jackson Hole Symposium. The Jackson Hole Symposium was economists, bankers, and all US top Hodge philosophers, professors get together, and they get together in a place called Jackson Hole, and there they discuss everything regarding the economy, and that's going on at the moment. That's why it's called the Jackson Hole Symposium, because it's in Wyoming and the Jackson Hole. And one of the Fed chairmen said there that the interest rates will probably rise by 75 basis points in September, and that sent the markets down. Yesterday the markets couldn't hold on to their gains. As I said, not a good sign when that happens. That's generally another sign of a bear market, but I've been telling everyone we're in a bear market now for a while, and therefore there's nothing new on that particular front. Soft grains have come down in price because Russia has allowed the export of soft grains through Ukraine via Turkey. However, there's a lot of saber rattling going on, and if that was to stop, which in my opinion likely is, then you're going to see soft grains go up through the roof, which is wheat, the barley, the corn, the soya, etc., etc. So be aware of that. It's the war in Ukraine is continuing, and it is likely to expand. That's it for now. It's a shortened version. Anything said in this piece is opinion only, nothing to do with investment advice, nothing to do with financial advice. It's just purely a media broadcast. May Valensky, driving markets. Have a good day.